Hey everyone, my name is Jack. I want to do a little bit of a different style video here today because I want to go over the taxes for my rental property business. I currently own one rental property that I bought at the end of July in 2020. It's a single family home in Indianapolis, Indiana, and I can actually show you right here. Let me switch to that real quick, and that is right here. It's this property in Indianapolis, so just a pretty run-of-the-mill single-family home. We did a little bit of work to it, just some minor repairs here and there, so nothing too drastic, and yeah, it's a pretty standard single-family rental. But I want to show you this because of the potential power you have when you invest in rental properties within the United States. Obviously, it can be different in each jurisdiction. Talk to a tax professional before you do anything with your taxes, especially business taxes, because they can get more complicated. I paid an accountant to do my business taxes. I am by no means a tax professional myself. So again, speak with a licensed professional before you do any of this. This is definitely not advice. Do your own research. But let's get into it. This is my ledger basically for the end of the year for 2020, and this was the first year I set up. I actually have multiple LLCs. That's the structure we're using, where we have one higher level umbrella LLC that owns all of the eventual multiple LLCs below it, and each of the ones below it will actually have the properties within them. So the top level one technically doesn't own anything. It just has a membership interest in all of the other LLCs that will actually own the properties. This is hopefully a good way to actually mitigate risk over the long term, since we want to scale a portfolio. But anyways, that's beside the point. Talk with an attorney for setting up an LLC structure if you're trying to do that, since that can get kind of complicated depending on what your goals are. Anyways, this is the ledger. I did redact a number of things, just not only for privacy concerns, but also so it's easy to actually point out the things that I want to go over, since there's a decent amount on this. This is more of a summary of the 2020 year for my rental property. So again, this is just one single family home. So a couple of very important things here. First here is how we're accounting for building and land. Apparently it's industry standard to do 90% of the purchase price. We bought this property for $85,000, and it's probably worth closer to $100,000 by now, maybe even actually well above that, because of the appreciation we've seen over the last year throughout the real estate market, Indianapolis included. It's a very hot market. But anyways, I got this property for 85 grand and put a few grand into it to make some quick repairs and bring it up to speed. There is a tenant in it, or there was a tenant in it already, still is, same one that we actually inherited from the previous seller. Anyways, $75,000 or so will be attributed to building, and this is important for a little something called depreciation. That's this next line down here, depreciation. So what depreciation is, it's a tax tool that the government lets you use, the federal government, that lets you depreciate the value of the building, because buildings lose their value over time if you don't maintain them. That's the idea. And we take that value and we divide it by 27.5 years. So again, that's this 75 grand. I'll highlight it so it's easy to remember. That 75 grand depreciated over 27.5 years. So over the next almost 30 years, I'll get a tax break on depreciation every single year against my rental property income for this property. And because we only owned it for a few months in 2020, again, we bought it at the end of July, this was the amount of depreciation we got to take from this property. But I'd have to pay recapture taxes, which I won't go into in this video if I were to sell this. So I would have to pay a tax on this money right here, since I'm depreciating the basis of the property as though it basically vanishes. But if I go to sell it, that value basically reappears from a tax perspective, and then you're going to have to pay recapture taxes on that, generally speaking. Again, talk to the tax professional, but that's the general premise. So I get about $1,100 depreciated against the value of this building. You can't depreciate land, since land technically can't wear out, if that makes sense. I guess certain types of land could, if you're going for like mineral extraction or something like that. But this is just land that you build a building on. It's not going to expire, or hopefully it won't expire anytime within our lifetimes. Now, moving right along, let's go down here to rental income. You can see we made about $4,700 in rent in the end of 2020. So this is from, what is that, August until the end of the year. This is what our rental income was, but we had some expenses as well. Mainly we had some legal fees here that we used when we were actually setting up both LLCs. This won't be a recurring thing because this was for kind of that initial administration and setting it up. We got solid attorneys to actually set up our LLCs and have a nice operating agreement for this umbrella level one, which is a little bit more complicated than what the property level ones will be. We want to make sure that we have a very easy ability to scale and also the ability to quickly go into perhaps other partnerships with other investors. But anyways, again, that's kind of beside the point. I have another video on our specific LLC structure. If you want to see why we actually did that, I'll go ahead and link that below if you're interested. But all told, we had about $2,900 in expenses, so you can subtract that from the $4,600 in rent, because expenses aren't taxed. So if you're using your rent towards specific expenses, whether it be administration, legal fees, and rehab costs, and a ton of other things. There's lots of different deductions out there. You can typically deduct that against your rent. Again, check with a professional. Moving on, we have depreciation. This is just the other side of that balance sheet equation, so you can kind of ignore that. We've already gone over that. Had some other expenses here. I don't remember what this was exactly. Have our management fees, since we have a professional manager. I live in Chicago, so I'm not managing this property all the way in Indianapolis. That would be a bit of a hassle. So we have professional management there. And then we had property taxes. This is technically goes again. This is actually like a reverse charge, since we got a credit at closing, so we didn't technically pay this. The seller actually paid this at closing, so this doesn't actually help us in any way from a deduction perspective. But then we had maintenance. This was the couple grand we spent at the beginning to bring the property up to speed. There was some deferred maintenance that needed to get done, even though there was already a tenant in there. There was like a leaking furnace and a leaking, or it wasn't a furnace, it was the leaking central air unit, and a couple other small things here and there. I actually have a full breakdown on this property from when we first bought it, and I'll include that below as well. So go ahead and check that out if you're interested. It goes over all the numbers as well as to why we actually went forward with this deal. And then we had $50 in interest income from opening up a business account. That was a nice little bonus. So all told, we actually took a loss if you include depreciation. So it looks like on paper we lost $1,200, but that's not telling the full story, because if we pull up a calculator, we have this $1,200 loss, so $1,236, and then if we actually subtract depreciation back out, so the $1,150, we technically only lost $86 on our rental property business this year, because there was a lot of administrative fees at the beginning there that were kind of sucking away the profits, but those are kind of a one-time thing. It was an initial investment that was expensed off. So you can see we have an $86 loss in cash as shown by the calculator, but on paper, because of depreciation, we get to pull forward a loss of $1,200 onto our personal taxes. That's my wife and I, since we own this LLC directly. So what that means is that even though I basically broke even, made no money on this property, I'm actually being paid by the government to own this real estate, because I'm getting a tax break from this. And even though I didn't get any profit from it this year, I should in future years, I didn't get any from it cash-wise this year, I actually get a tax write-off because I owned property. I think that is such a huge thing that a lot of people don't really understand the power of what owning rental property can really do. If you can take this to the next level, imagine having a bunch of these properties and you're making 100 grand per year in cash flow. If you have enough depreciation and other write-offs, you could largely have a tax-free income because of how the US government has designed the tax code to totally favor investors, and especially real estate investors. Whether they say they're for the little guy or not, pretty much every congressperson owns a bunch of real estate and has a bunch of investments, and it's no surprise that the tax code favors those sorts of people. So just keep an eye on that. You'll find that there are a lot of nice little exceptions like that that coincidentally seem to help out politicians. As you can tell, I'm not very appreciative of politicians as people, but I'll take what they give me because they designed this system, and I'm not going to pretend like the system doesn't exist. So if I can play the game, I'm going to do it, as long as I play the game honestly, of course, as everyone should. So I'm just going to repeat that one more time. We had about $4,600 in rent, and that was largely offset by all of our expenses, to where we lost about $86 in cash. So that was our real loss, if you want to call it that, but our paper loss, because of depreciation, was $1,200. So we lost $1,200 on paper. On paper. But in cash, in a cash perspective, we basically broke even. So that would mean that we wouldn't have had a tax liability anyways, but instead we actually get a tax credit, well, not really a tax credit, but a deduction to apply against our otherwise taxable income on our personal returns. So that is hugely powerful. And again, like I said, if you're trying to scale a portfolio and you get a huge portfolio and most of your income is coming from rental properties, a lot of it could be tax-free, if not all of it, depending on the tax basis of your property and how much you can depreciate each year. And there's other deductions out there as well. This is just one very important and very big one for many real estate investors. So what do you think of this system? I mean, it's totally up to you. I don't think it's a very great system. I'm going to take advantage of it, no doubt. It's definitely a very powerful system, no doubt. The government's trying to incentivize investing in real estate, I suppose, maybe not intentionally if they're just trying to benefit themselves as politicians, but anyways, that's a very pessimistic outlook on it. But I mean, what you think of this? The fact is, it's there. This is an option for people if you can buy real estate and you do it correctly and you make sure you follow all tax laws and you do stuff like this. You can whittle down your tax bill legally and even get a net deduction on your income despite bringing in tons of rent if you have a lot of deductions in a piece of real estate. This is just one of many deductions that I'm highlighting. I got basic expenses and then depreciation. I don't even have a proper mortgage on this property, so I don't even have an interest deduction, but you can deduct mortgage interest as well, generally speaking, so that's another option. Lots of different deductions in the tax code. It is nauseatingly complex. I'm not going to deny that. I think that's terrible, but in those complexities, there are opportunities. But if you guys found this interesting and you appreciate this level of transparency, definitely leave a like since that would help the channel out a lot. I try to make that something I really focus on my channel is transparency, showing you guys what's going on with my finances. Since I'm not incredibly wealthy, I'm definitely in a good position and I'm always trying to get in a better one, but I want to show you guys what I'm doing in real time. I have my net worth updates that I do on the first of every month, so definitely subscribe so you don't miss those if you're interested in that, where I try to peel back the curtain and show you guys what's changing with my financial picture, since I think that's important for understanding where I'm coming from. You should know where someone's financial status is so that you can understand whether their decision would make sense for you too, since your situation might be very different, your risk tolerance might be different, and there's all sorts of different factors that go into any financial decision. But as always, definitely do your own research. But that's all I've got for today. As I said, definitely like this video if you like it, since that would help the channel out a lot, and be sure to subscribe so you don't miss any new updates since I put out new videos every single week. But until next time, take care.